Yesterday, we did a bunch of analysis and showed you guys how it looked like it could have been a bear trap, and it looks like we were right. And very quickly, I just wanted to touch on the VIX before we go into the SPY. There's a lot of good stuff on the SPY that we want to get to, but on the VIX here, we did get a big red candle, and you can see in the beginning of the day, we actually got above 20, which is kind of scary, but we ended up closing below a reading of 20. Now we are still elevated above the 200 and above the 50, so we could see this still start to take off. Don't think that one green day can't turn the market right back around and go touch that 200-day moving average. But what we were paying attention to and what I mentioned to you guys last night, if you were subscribed, you would have seen this 2-hour divergence. Okay, I believe that this 2-hour divergence was going to play out, and we see it start to play out right in front of us. Okay, you can see this divergence from this high here, and it even shows itself down here on the RSI. Okay, so if we go to the RSI, we can see this big divergence here. And overall, now I'm just paying attention to if this little trend here, this little mini trend breaks, and then we go maybe fill this gap here on a closing basis, or like we said yesterday, we may even go all the way down to that reading of 1212, which is just a gap from pretty far back. One thing on the daily that we pointed out on the SPY was that we didn't exactly touch that 200-day moving average, but all we did was popped over to the futures market, and you can see the futures market actually cut below that before open today, and then we ended up going right back up. So we did get the touch on the 200 on the futures market, but we want to pay attention to the actual market. At least that's what I like to pay attention to. And we're going to go into the 2-hour here just to show you kind of what I was looking at throughout the day. So throughout the day, overall, what I was thinking was this is a bear trap. Okay, so this is a bear trap. We're outside of our weekly range. That would be these purple lines here, so it makes total sense for us to want to come back into that. And now we're starting to struggle right along that little trend here. We're closing at the high of the day, which is a good sign, and we're violating that a little bit. So we are starting to see some upward moves. What I noticed throughout the day was this little 2-hour divergence, which we actually mentioned last night. Okay, so this divergence actually is starting to play out to the upside. We see it on the MACD and the RSI at the same time. That means we could see some strength, and that's why I'm going to talk about the Qs, but I really want you to stay for Apple right after that, because Apple has a pretty strong move that could happen with what it's showing me today. How high could this go? It honestly could go all the way up to the top of our weekly expected move for the week by Friday. So that would line up pretty well with our gap fill. That would be a very strong move. And if it does get there very quickly, we would want to be looking for maybe some kind of momentum dying to the upside, and maybe we need some kind of pullback. But we could go as high as all the way up towards this 438.85. One thing we were paying attention to on the Qs was our head and shoulders, and the reason that we really thought that yesterday was a bear trap was because of little things like this. We actually saw the SPY move to lower levels and some stuff move to lower levels, but overall the Magnificent Seven did not break through any lows like this one here on the Qs. So the Qs didn't break through this low. We didn't break through our structure. That's this big triangle we got going on here, and we do see our head and shoulders still forming. So what we want to see from here is some strength out of this head and shoulders that can maybe project us all the way up into the top of that triangle that I just zoomed out on. Thing is, we have data coming out tomorrow as well. So we have initial jobless claims tomorrow, and then we do have unemployment and non-farm payrolls on Friday. So don't also, just like yesterday, don't think one red day means we're going to tank and crash to lower levels. Don't think one up day doesn't mean that we can get a piece of data to break us to the downside. The bull case, we already kind of gave you that, but the bear case overall, you want to be paying attention to this low right here. Okay, when we break that low on a daily closing basis, it is going to be a little bit of like the floodgates opening. I believe we will start to head to that 200-day, but overall right now the structure looks like we want to move higher. On Apple, I just want to go over the daily with you, okay? I don't want to go into smaller timeframes and confuse you. We have this little wedge that formed here, and we're starting to break out of that. We even got the little retest, which touched the bottom of our support, our purple support zone here, and now we're starting to see a very small, you can probably barely see it, a green impression on the histogram, meaning that this divergence here on a daily chart here and here is actually starting to confirm. And if we can see this fully confirmed, we can see a lot of strength. This could move very quickly up into its resistance here. So this resistance zone here is this gap that we struggled to fill around the beginning of September. And I believe we could actually go all the way up to that point, and then maybe we'd start to talk about October 12th. If you don't have October 12th marked on your charts, I highly suggest you do that. We could see a strong move with this divergence all the way up here. And then if we are at those levels, we'd want to be looking for, if we are seeing some momentum starting to die out to the upside. But overall, once we do get that data, momentum type stuff, we can look at it and make a decision based off it. But overall, if that number comes in lower than expected, we are going to see stocks go higher. If it comes in higher than expected, we are going to see stocks drop. So we really want to pay attention to the Thursday, October 12th. And those numbers that I'm talking about is the CPI. So we want to pay attention to the CPI on the 12th. But this move can be very strong because you're seeing it set up between these lows here on a daily chart. What did we say about Tesla? Okay, we said that this is possibly our head and shoulders, and this is a reason that we saw this as a bear trap. We didn't see Tesla breaking below this low on that red day yesterday, so we said this is possibly a bear trap, and we were right. So we actually did see that play out, got a bunch of retests, and all I said was we're expecting a strong move if we get out of or get above these highs because we've been retesting over and over. So the fact that we did break those highs here and we got that strong move higher, now we're going right into gap resistance. That's this level right here, okay? So we do have that gap resistance. Overall, we are looking like we're starting to get to overbought territory, so don't think for a second if we gap higher in the morning or something like that, that we can't see some kind of pullback just to go find some more buyers and then possibly take us to a further upside. So I am going to give us a big thumbs up and a nice pat on the back if you were subscribed yesterday to get this info. We broke above that high and we started to head to higher levels, and now we are getting over bought on the hourly. So we could see some kind of consolidation or pullback before we see more upside. Quickly on the daily, if you haven't been subscribed, we talk about this big triangle that Tesla has been in all the way since its all-time high. And as you can see, we've been in that triangle for quite some time. We've been forming it. We have a buy signal on the daily. So if we do start to break out of this triangle, we could see a pretty big move. Overall, we just want to be paying attention to if the stock does pretty quickly get to the top of that triangle, we would want to be paying attention to momentum and things like that to see if there's any downside. If you do see a quick move up here, I would expect some form of consolidation or pullback, and then we can see maybe around that October 12th, which is right around here, if that number is good or bad for the market, because if it is bad for the market, you're in a point where there are people who want to sell and take profit. So you could see some downside if that number comes out on the CPI as pretty hot. Amazon, we kind of said something similar to the Qs and Tesla. Okay, it did not break this low. Okay, so this was another thing that kind of convinced us that this was a bear trap. If it would have broken this low, maybe today, early on, or yesterday, I wouldn't have even put bear trap in my thumbnail or anything, but since we didn't, we just moved our right shoulder over to this side. We have the left, the head, and the right shoulder, and now we want to see that strength kind of like we did in Tesla. I'll use this point to just tell you, like, we do still want to pay attention to all the data that comes out. You can see how much the data is moving the market right now because volatility is a little higher. So if that initial jobless claims tomorrow comes out as bad for the market, you just want to pay attention to if this low here starts to break and we close on a daily basis a little lower, we could start to head towards that 200-day moving average pretty quick. And you notice that I do have a monthly risk range here for Amazon, and that does, if we do get to here pretty quick, we could see some kind of bounce to get back into this little area in here. Maybe a lot of people were scared because I think NVIDIA had like almost a 3% down day yesterday, but I overall was like, this thing has moved up by how much? This thing moved up by 10% in just 2 weeks, so we were due for a little bit of a pullback. We saw those overbought conditions and we were like, this just looks like a pullback. We're not pulling below that 50 on the hourly or anything like that. We're actually finding some strength, and now we're above all our moving averages. So we want to see kind of like an ABC pattern from this. Okay, so we want to see this to give us an ABC pattern, which actually probably lines up pretty well with the gap fill. Okay, so we want to see this to here. Maybe this is our that's our B point, right? And then we're going to see the C start to play out, which actually measures out to pretty perfectly fill that gap. So for the bullish case, that would be what this is. You're looking for that ABC pattern to take you higher. You overall just want to pay attention to that data because NVIDIA can move pretty quickly. I mean, it's up 200% this year. So once we start to see real bearishness in NVIDIA, overall on the bear side, same thing as always. We want to pay attention to when that neckline breaks. And if you want me to zoom out real quick, you can just see where that neckline is. It's down here towards that, 407 mark. So we want to just be paying attention to when that breaks on a daily closing basis. One thing that really helped the market out is we did see that drop in the 10-year yield. The 10-year yield did start to fade throughout the day. We got a little bit of good data this morning, so that's good with the PMI and things like that. So, but we need to be paying attention to the next data point when looking at yields. So tomorrow we have initial jobless claims. If those things start to get higher, then we are going to see this start to fall off a little bit more. And if they do come in lower than expected, then this is going to continue, right? This ballistic move is going to continue to the upside. The longer we stay up in this unknown, the more highs that we keep making, the more pain we're going to see in the market. The other thing I just wanted to say about yields real quick, we are starting to uninvert. Okay, we're starting to see that uninversion happening. You can see the 2 years at 5.056 and the US 10 years at 4.735. So if we start to see the 2 year get lower than the 10 year, that's when we're going to start to see recession scares right now. I just want to point that out so you guys can pay attention to it throughout your day. But that data, if it does push this down to the downside, then we are going to start to see a bigger pop in the market. TLT, there's not too much to say because there's not much structure. Overall, I just pointed out that this 8250 is the lows from 2007, so we could head all the way down to 8250 before we really get a bounce, but it looks like the market wants to go higher, and the market and TLT right now are acting in tandem, so that means that TLT actually could act like the SPY, Apple, or something like that. If these yields drop off, we could start to see this start to rise to the upside. I'll just touch on this real quick because we mentioned it yesterday. You see this kind of happening with the VVIX, which is the volatility of the volatility. And we just noticed that the divergence looks a little cleaner on this chart. And you can just see it right here on the RSI. You see it here on the MACD. And now we're starting to play to the downside. So we want to see this start to break through and start to go lower. And that will really help out the market. Okay, so the main takeaway from this video is we had an 85% chance of an up day in the next 2 trading days as of yesterday because the VIX was above 10%, which just tells me that we got our green day. And now that can all be ripped away by a piece of data tomorrow, or we could see more upside with more potentially good news coming out tomorrow and Friday with those unemployment numbers and non-farm payrolls. So we just want to be paying attention to the data. The data is really moving the market. And we want to see if those lows start to get broken or if we start to see some ABC patterns play out or consolidation and then we break to a new high. We want to be paying attention to those types of things. But overall, I just want to wish you guys good luck on your trading tomorrow, and I hope you have a good night. Peace.